Hello, traders. Good morning. Morning, guys. Morning, everyone. Welcome to our exciting section here on our morning market review on this beautiful Thursday morning here. My name is Emmanuel. I'm reaching you from the beautiful city of Port Harcourt, guys. Port Harcourt is beautiful this morning. Cool, chilling. So let me know where you're joining us from. So we have, I think the number in the room is increasing. Okay, so we're going to give a little time for more persons to join us. So today is a day where we're going to analyze currency pair, we enter commodities, we enter indices, just to make sure that get the analysis right and of course make money on the market. Okay. So guys, get to the comment section. Let me know where you're joining us from and also if you can hear me. So comment section now, please. Okay, Isa, thank you very much for joining us. That's from Ilorin in Kwara State. Thank you very much. Thank you very much for joining us. So if you have your friends, your family members, everyone trading or not trading, you can send them this link. They can stick, join, and get value for themselves. And of course, that alone will make them to want to take the first step. Okay. So let's give a little time for more person to join us, maybe 2 to 3 minutes, and we'll start fully. Thank you very much, guys. All right, good morning once again, guys. I think let's just get started right now. So we have good numbers in the room right now. My name is Emmanuel, guys. I want to believe you guys can hear me. A little sound check, please. You can hear me, right? So let's just get started. This is our morning market review. We do this every Monday morning, Tuesday morning, Wednesday morning, Thursday morning, and of course, Friday morning. Every trading day, one solid hour of market analysis will give you tips and tricks on how you can be able to succeed on this market. Of course, navigate the market profitably, and you always make yourself available to take good trade in the market. Okay. All right, so let's do fundamentals, then we now switch over to technical analysis. So like we always do, we like to check for fundamental news on Forest Factory, okay? So I'll go straight to Forest Factory right now, Forest Factory. So if you're joining us for the first time, just type on your browser www.forestfactory.com. Very simple to do, right? So just type forestfactory.com. So this is what we always do every trading day. If you're a trader, you're a day trader, a swing trader, even a position trader, you should always check for the news event, right? Because this news can influence, can affect the direction of the market. Okay, so you always do check. You always do check. So for today, Thursday 29th, as you can see right here, we have now, our attention is usually on the impact, right? The impact is the volatility of the news. Impact is the volatility. So volatility talks about the volume, right? The amount of interest on that particular news. Or it talks about the amount of influence or the amount of move that news will have uh, when released. Okay. So the impact is the volatility. So simply, we have the yellow impact, yellow are low volatility. So most of the time, we tend to ignore it, right? Because the move is pretty much the normal market move, right? So our attention is on the red ones. So the red ones are the high impact. So for today, Thursday, by 2:30 p.m. Nigerian time, we're having news on the dollar. That will be unemployment claims. So now this is a weekly unemployment claims, right? On the dollar. So this weekly news tend to track those in the US filing for unemployment benefit. Okay. So the number of individuals who filed for unemployment insurance or benefits for the first time during the past week. So that is the definition of that unemployment claims, right? It tries to measure the number of individuals who file for unemployment benefits, unemployment insurance for the first time. So that value is used to measure, hey, this past week, what is the number of those that are actually unemployed? Because it's when you're unemployed that you can go ahead to look for some stipends, right, from the government, right? Stipends so that you'll be all right. Stipends for maybe soap and the rest, and to take care of your basic needs. Okay, so that is the unemployment benefits. So actually, it is a tool that is used to measure in a short period of time the unemployment that is actually building up, right? So that the government can look for ways to tackle it, ways to tackle it. Okay, so that tells us actually unemployment rates, right? But it is this value put together that will later result into the unemployment in that particular country. Okay, so that's the high impact news we have for today. That means if the number is increasing, so you look at the numbers, right, or the results of the news. So the far right of the page, this area is the result, right? So you see the details, you also see the results. So the result is actually the actual, which is the main result, then the forecast, which is a projection, then of course the previous, which is the result the last time it was released. Okay, so the actual is what actually, when released, affects the market. So if the actual tends to be greater, bigger, bigger than expected. So it's going to be a bad news, right? Because this is unemployment. This is already in the negative, right? This unemployment. If this was employment, if the number is increasing, that means actual is greater than forecast, right? Yeah, it means it should have been a good news. But right now, if the number is increased, so the forecast is actually 206K. Wow, that's big. So, but the previous number is 200,000. K is thousand. So 200,000 last week, five for unemployment benefit. And I see it is forecast that the number will increase. Can you see? Can you see clearly? It's forecast that this number will increase. So it will increase by 6,000. So that's the forecast. Now, this forecast is no ordinary forecast, right? So this forecast is put together following all the other micro and macro indicators already seen during the past week, okay? So that means it has already been forecast that it will increase, but we are waiting to see what the actual will be. So once the actual is released by 2:30 p.m., guys, we're expecting some kind of move, right? So if the actual is higher, that means we'll be having more doom for the dollar. The dollar is already going through some kind of doom, man. The dollar is weakening, man. Are you seeing what gold is doing? Are you seeing what all the USD denominated currency pair is doing? The dollar is weakening, man. So it's a good time to dump the dollar. Okay, guys. Are you guys still with me? If you're just joining us, this is our morning market review, guys, and this is Emmanuel. So, guys, I hope you got some value from that. So that's the only high impact news we have for today, being Thursday, the 29th day, guy, of January. Man, January is already coming to an end, guys. So January just remaining today and tomorrow. Uh, Tradable days, right? Tradable days. 2 days, tradable days. So, guys, what are you going to make out of these 2 days? Are you just going to sit down there and be trading small, small, or you're going to like get loose and dive deep into the market? All right, guys. So if you're trading and you're using very small capital to trade because you're trying to be very careful, come on, guys. To be careful is to be using stop loss. It's not the capital. Carefulness in trading. Let me do a little rant, if you don't mind. Carefulness in trading is to be using stop loss, right? In your trade, not small capital. Say, let me test the water. Okay, if you test the water, you keep testing it. Oh my God. So if you're dealing with small capital guys, let's say anything less than 500K, anyway, it's actually really relative, sha. You top up your account more, right? Increase your loss size, but make sure you use stop loss. Stop loss will be protecting the capital. Then, of course, trading is smooth, right? So, guys, let me switch over to my chart so that we can do some technical analysis. Now, like we always do, try to look at the major currency pairs, right? Major currency pairs. So, we look at Euro USD, GBUSD, USDJPY, all of those instruments that have USD, right? So we look at them. Why? I think an analysis on USD is one of the analysis that can guide you through trading so many instruments on the market. Okay, so guys, you guys are getting value, right? So let me switch over. Excuse me. So guys, I've been able to switch my screen. Can you see my screen? Let me know if you can see my screen. This is please check if you can see my screen, please. Please, can you see my screen, my chat? Okay, beautiful, beautiful. So guys, so let's start from Euro USD. So like we always do, like our custom is, we try to look at the fund. We try to analyze from the H4 time frame. So put the chart first on the H4 time frame. Put the chart first on the H4 time frame. So on the H4 time frame, whatever you see forms your basis for your market direction, right? So whatever you see on the H4 time, thank you. I can see all of the yes, which means you guys can see my chart. So whatever you see on the H4 time frame forms your basis of the market direction. So guys, what can we see here? What can we see here? What can we say? Is this upward trend or is it downward trend? What can we see here? Trading is not really that difficult. If you can just take it a step at a time. So please, what can we see here? Is this okay? Let me help us and do something. The market was doing something like this. I'll not say it, but I'll just draw. The market was doing something like this, right? And now it is now doing something like this, right? So on the H4 time frame, so one thing you do is you first switch to the H4 time frame. I think two persons said upward trend. Then Effion, how are you now? Where are you reaching me from? Effion said somehow upward, but it's just crazy. Ah, how crazy it is, man. Then Femi said upward. So now once you have defined the trend to have a particular direction, then if you go down to a lower time frame, right? Right? If you go down to a lower time frame, what we call entry time frame, right? So this higher time frame is your directional bias, right? So your directional bias comes from a higher time frame. Like, of course, it can be also daily time frame. But for us, looking out for 20, 30 pips daily, we can use 4 hours time frame, right? So this is your directional bias. And after the directional bias, you go down to a lower time frame to look out from the entry, right? So where am I going to enter? And most of the time, you should your trade should align with what you have seen. Most of the time, or let me put it this way: 80% of the time, your trade should align with what you have seen on the higher time frame. That alone kicks a lot of the noise out of trading. So you have removed a lot of the noise out of trading. Mm. All right. Now, I didn't say 100% of the time, I say 80% of the time, right? Because sometimes you might need to catch in on some retracement on the market. Now, if you're catching in on some retracement, for example, H4 time frame is going upward, and I want to catch him on some retracement, it means a sell, right? That's what it means. The higher time frame is going up and I want to catch in on some retracement on the lower time frame, that statement means a sell, right? Now, but then if you are selling, it means you already know that you are selling against the higher time frame original direction. That alone tells you that this your trade is going to be a short trade. It's so sweet to know that this trade I have placed is not going to be a trade that will live for 1 day, 2 days, 3 days. Going to or 4 hours, 5 hours. No, because you know that you are trying to catch in on very short move, right? Very short. That alone tells you that once you see profits, then you have to protect your profit. So these are just the way we trade. But then if you are trading in the original direction, if you see profit, you also protect your profit, but you know in your mind that hey, we are still going in that same direction. So guys, so what we saw here is impulse. We have seen an impulse, a very strong impulsive leg to the upside, and the market have done beautifully a retracement, as you can see. Now, if you look at this retracement have done if we measure it, guys, it must have gone around our Fibonacci numbers, right? So let's use Fibonacci to measure it, right? So let me draw from this leg, because that's the lowest leg, to this high. So I think it has bounced on our 61.8, right? Which is the strongest of all the Fibonacci levels. 61.8. That's a deep retracement. And then taking up from there is already giving us some bullish sign, right? So first 4 hours bullish, second 4 hours bullish, third 4 hours bullish, and then we are on the fourth 4 hours, right? Now we might have some retracement before going up, but then it means the higher time frame is still on a very strong upward trend. Okay, so I will now switch over to 15 minutes time frame for entry, right? So 15 minutes time frame. So one of the challenges most persons have is that once they have identified the direction of the higher time frame, right? Even though they trade in that direction, they still get to take some loss. Two of us, I'm asking you, you have identified the direction of the higher time frame, doing your top-down analysis, you now trade in that direction, and you still take some loss. Two of us. Okay, somebody have replied. Okay, Effion, you're from PH. Okay, that's true. That's beautiful. Felix, you say true. So you have identified the direction of the major market move, right? And then you still trade in that direction, and you're still taking some. A lot of persons are saying true. Okay. So that's actually true. It simply means now the challenge is on your 15 minutes time frame, you do not position very well, and your stop loss is not also positioned very well. So these are the two things, right? Your 15 minutes time frame, you do not enter at the right time, and your stop loss is not at the right place. Okay. So if you're having that challenge, it means you have to now switch over to quality over quantity. If you're having that challenge, listen carefully. If you're having that challenge, then you have to switch over to quality over quantity. By that, I mean you have to now start taking quality setup, not quantity. That simply means before you now pick a trade, since you're having that challenge, you should check some boxes before you enter the trade. So on the 15 minutes time frame, you want to check some boxes. So what are the boxes to check? Number one, liquidity. So the market I cannot type them here, but then if you have a pen and paper, you can be writing them down. So one of the boxes to check is liquidity. Now, this liquidity is the market always hunt for liquidity. So don't say the market is hunting for you. No, the market is hunting for liquidity. I know money is the liquidity, okay? And of course, we are trading with money, okay? So one of the things the market hunt for is, is liquidity. So that means, and where is liquidity? Liquidity is usually at the highs and the lows. Of course, major ones will be at the major high, and of course, minor one will be at the minor highs and lows, okay? So liquidities are actually at the highs and at the lows. So one of the things you want to do if after you have followed the higher time frame direction, you place your trade on at the lower time frame and the market is still stopping you out, right? Now you have to now check some of these boxes. It means before you trade on the lower time frame, 15 minutes I mean, you want to look at for some liquidity sweep, right? Let the market do some sweep, right? I mean some cleanup, right? So those cleanups are actually at the highs and lows. Section high, section low. Yesterday high, yesterday low, right? For example, look at this. This is actually a liquidity level, this low. This low is a liquidity, this low is a liquidity. But guess what, sir? Among these two, you will notice this liquidity is stronger than this one. Why? This one is a yesterday low. So yesterday low, right, is a stronger liquidity, and of course, it will have a lot of attention than this one. So this one will happen to be it may later turn to be the Asian low, right? So this yesterday's highs and lows are stronger liquidity level than internal structural highs and lows. Okay. So one thing you want to do is you want to wait for some liquidity sweep. For example, this market may sweep this liquidity, right? And start showing you some bullish signal before you buy. That's what I mean. Please, are you following? Or the market may now you want to actually buy. The market may sweep this liquidity, right? Now you wait for some bullish formation, right? Those are the confirmation, maybe a bullish engulfing before you buy. Can you see that? Uh-huh. So exactly what happened yesterday, the market swept all these liquidity here. We call it a trend line liquidity. So the market swept all of these lows to this level before going up. Mm. So for our buying, for our signal, it simply means we are looking out for buy signal, guys. Buy signal uh, on Euro USD, okay? Buy signal. So, but we will only buy if the market can trade below this low. So these are the two lows I'm looking at for today. The market will have to retrace a little bit to these lows before I can buy, right? Then it simply means I am buying low, right? So I want to buy low. I want to buy low. So I'll wait for a little retracement before I buy. So these are the two areas I'm looking at for a buy. So this is one and this is two. So guys, buy signal on Euro USD, right? But not buying immediately. Buying immediately is not bad, sha, because buying immediately is an aggressive entry, right? So if you buy immediately, your stop loss. Now take note, see how this trading is done. Oh my goodness. If you buy immediately, you're buying here, right? Then your stop loss will have to be where? Yeah. So that's why I say this space is in liquidity. So your stop loss becomes a market liquidity. Now the question is, have you ever been a liquidity before? Get to the comment section and let me know. Okay, have you ever been a liquidity before? Have the market used you as liquidity? Let me know. Let me know. Get to the comment section. If the market have used you as liquidity before, I think there will be a special section for that category. So if you buy here, sometimes the market may go up, but guess what? The market knows where there is liquidity, right? So the market will come and tap that. So this is the case of you buying or selling or trading at stop losses of other retail traders. So write it down very fast if you're hearing for the first time. Trading at stop losses of other retail traders. Write it down so that it will not disappear. So wisdom demands that when you hear something fascinating, something new, you quickly write it down, right? So this concept I'm showing you this morning is actually trading at that trading. I mean buying and selling, right? Buying at other retail traders stop losses, or selling at other retail traders stop losses. Okay, fine. I think we've made that point. So let me see the comment section. So I asked a question. I said, have you ever been a liquidity before? Wait a minute. How do you know whether you are even a liquidity? Oh my goodness. So you can ask the right question, right? How do you even know whether you are a liquidity? So guys, I think we are done with Euro USD. I'm sure you got some value, right? Get to the comment section, right? Engage me, engage me. Did you get some value on it? So let's do GPUSD. Wait, wait. Okay, Mr. Bello. Say when you're a victim. No, that word victim is a strong word now. Hmm. So let's do GPUSD, guys. Are you ready with me? Okay. So GPUSD real quick. So it means we want to buy. Don't forget. But we are waiting for the right time. So what we are doing now is called waiting, right? Waiting. So Euro USD just put in waiting, right? Waiting meaning that Mr. Tunji, I can see your response. So if you have been in that situation, it simply means I think you have to switch over more to waiting, right? So if you see the market going in your direction, go to a lower time frame and wait for a liquidity sweep, right? So liquidity sweep might just be the solution, right? To reduce all of those times where you see the market going in your direction, you enter and you are being stopped at. So guys, um, GPUSD right here. So let's do H4 time frame. Okay, H4 time frame. Most of you already know the custom right now. It's not H4 time frame. So guys, this is equally on a very strong upward movement, right? A very strong upward movement. So guys, this is still excuse me. So this is still a very strong upward trend. So it simply means we want to look out for opportunities to buy, right? Opportunities to buy, right? So opportunities to buy at the low risk trading, right? So when you look out for opportunities to sell, it's a high risk trading. Okay. So every time you trade, you want to always know, this particular trade, is it a high risk or low risk? So guys, you categorize your trading into these two categories, right? I mean, every single trade you take, this one now, is it a high risk or a low risk? This one, is it a high risk or a low risk? So one of the ways to, now there are several ways to identify or to know high risk and low risk, right? Now, high risk, so, but for us here now, if you are following the parent trend, if you're following the parent trend, and you're trading in that direction, then of course you're taking a low risk trade, right? A low risk trade. But then if you're trading against the parent direction, it's a high risk, right? It's a high risk because you may just start not seeing a negative trade for a long time because the trend is just going against you. That's the reason why we called it a high risk. So guys, for this one, we are seeing a very strong upward move right here, right? So if you notice, the market got to this high. So let me check that high. So for this year, the year is just beginning now. So that high seems to be our highest high. That high seems to be our highest high for this year, right? So let me even check. Now that is even the highest high for this year and last year. So the market have done an all-time high, right? An all-time high for last year and this year, right? So what is the price of that all-time high, guys? So the market have priced, right? GPU is at 1.38. Guys, 1.38 is the highest high for, man, how long now? That's the highest high we have seen for since 2022. Since when now? Yeah, since 2022. So guys, highest high, highest high for the past 4 years now, man. 4 years, 3 to 4 years actually. Highest high. So that means that is actually a bubble, right? A bubble that can burst. But when it bursts, it's just going to be a retracement that will be waiting to go up again, okay? Mm. It's going to be a retracement that is waiting to go up again. So I think on this on this daily time frame, I am seeing, right? I'm seeing a fair value gap right here. There's a fair value gap right here. That the market may need to tap in on before going up. Okay, but this is for a swing trader, right? This is for a swing trader. Now let's switch over to H4 time frame, guys. On H4 time frame, so that high we have touched is a very high one. That high we have touched. It's a very high one. So this is that area I highlighted on this area I highlighted on the daily time frame, right? So this area, if you notice, the market came down to this area and bounced off, right? So the market may want to do something like that again, okay? And this this angle is very steep, right? And whenever it's steep, it doesn't really last. It needs a good retracement before it can continue going upward. So if you watch carefully, right, you still remember this drawing, right? This drawing of angle, this right angle. As you can see carefully, this is actually above 45 degree, right? So this is above 45 degrees. So the market is actually trending upward there to a very strong momentum that have driven it far above 45 degree. And guys, far above 45 degree, we call it steep, right? The market is steep in the upward direction. So we're expecting some level of retracement, right? Okay, but when we say expect, we don't really know when to come, but we're expecting some level of retracement. I'm sure some of you understand what I'm doing here, right? All of you should understand. So this is actually the angle I was talking about. This angle. So this angle is above 45 degree, right? So that's why I call this steep. That's why I call it steep because the whole full right angle should be 90 degree. Okay, so guys, I think that's for the higher time frame. Let's go to a lower time frame. 15 minutes time, the guy. You have questions, get to the comment section, drop it, please. Questions, you have questions as we're analyzing, get to the comment section. Okay, I think, okay. So you say what should guide? Okay, what should be the guide, right? In setting buy, stop, of all, okay, I think you mean all or buy limit instead of instant execution. So what should guide is actually your analysis. It is your analysis that guides you on whether you're doing instant execution or buy stop or buy limit. It's your analysis. And when you have analyzed and the analysis you have arrived at, hey, I have to wait for example, a liquidity sweep, right? So Mr. Alebode, for example, you have analyzed and you've gotten to a point of, hey, I have to wait for the market to do a sweep like we saw on Euro US. You have analyzed the market have to do a sweep, right? A liquidity sweep. So in that case, you have to, it's a pending order, right? That will help you. For example, remember we just did this analysis, right? So your question is what should guide you on whether to use a pending order or to use an instant execution. So for example, I showed you this particular level, right? And I said this level is actually one of the liquidity sweep that needs to happen, right, before going up. And I showed you this order level. So one thing you can do at those levels is use pending order. Actually, a buy pending order there, that would be a buy limit. So buy limit here, buy limit here. That's it, sir. I'm sure you understand it, right? So buy limit here, because when this is happening, you may not be there. You may not be there. So buy limit here, right? Buy limit here with stop losses and of course take profits. So I'm sure you understand that. Let's continue. Uh-huh. So back to our GPUSD, guys. Back to our GPUSD. So GPUSD 2 is on the lower time frame is doing some kind of retracement, right? Which we love, right? It's doing the retracement we love. So guys, I think so for GPUSD, we want to also wait for a sweep, right? A sweep. So this is the sweep, and that sweep coincide with our opening price for the day, right? So which makes it a very good one, right? So that would be a liquidity sweep of the opening price. Of course, liquidity sweep of Asian low. Of course, it will be a strong one. So guys, this is where your buys can come in, right? This is where your buys can come. So these are low risk kind of trading, right? So the high risk one will be I want to buy when the market breaks this level of resistance. So there's a resistance right here. That was why this price stopped, right? There's a resistance. So You buy when there is a break and retest, or the market breaks above here and close above it. So these are the two areas. So if you notice, we want to buy, right? It is buying we want to do. Why? Because the trend is actually upward, right? The trend is upward. The trend is upward. So guys, that's GBUSD and of course Euro USD. Then let me look at USD JPY, right? I looked at that instrument yesterday and I did some analysis on it. So let's go back to it again. So this is USD JPY, guys. But let's look at it on the H4 time frame as we always do. Would have loved to consider, somebody was asking why not why H4? Would have loved to start from daily time frame, right? But time will not permit us so much to always to start from daily time frame, look at H4. So H4 time frame gives us the information, most of the information we will see on the daily time frame, right? So that's your own answer there. You were asking why only H4? Why H4? So who is that person again? That's Mr. Johnson, right? So H4, so with H4, I can see the kind of information I would have gotten on the daily time frame, right? And that information, so H4 is somewhere in between the swing traders and the day traders. So it is H4 that separated. So that's why we start from the H4, right? Okay, you understand that. So most of this time frame, I hope you know the market is the same thing, right? So the time frame is just a break, right? To break down the chart or the market into these hours, right? So for one time frame, you can know or see what is happening on another time frame. Very important, right? Because of course we have we have 6 of the H4 time frame, 6 of the H4 time frame in the daily time frame. So just six, just six. So if you're on the H4 time frame, you should be able to say, hey, I know what the daily time frame will look like. Okay, you understand that, huh? All right. So now, but to make analysis longer, then of course you want to also look at the daily time frame, come down to the H4, and of course your entry as a day trader, uh, looking out for 20, 30 pips, right? Even 10, 20, 30 pips, then of course, you want to always enter on a lower time frame. That would be starting from the 15 minutes time frame, okay? So that's why our entries are always on the 15 minutes time frame. Mr. Johnson, have you gotten value from that? So on the USD JPY, we can see clearly here, right? So we got a very big gap, right? And the market tried to retrace a little bit, but could not. So this big gap is pointing and showing the market is facing downward, guys. This market is facing downward, right? So, but then, after every move like this, there would actually be some level of retracement, right? So the market is trying to retrace, right? And remember, this is USD, this is US dollar, right? Market is trying to retrace. So when you see this kind of move, it means you're going to have a bullish scenario and a bearish scenario, right? We're going to have a bullish scenario and a bearish scenario because look carefully. After this big move to the downside, right? So we got a low. The market gave us a high. So after this big move to the downside, we got a low, and the market also printed a high for us, right? Then guess what happened next? The market was able to destroy or to violate this low. The market was able to violate this low to form a new low, right? So that's actually tenets of a downward market movement. So the market was able to violate this low to form a new low, as you can see, right? Then we got some kind of retracement again to the upside, right? So we got a retracement. Uh-oh, why is it not drawing now? So we got a retracement to the upside, as you can see, right? So this is what we have on the H4 time frame. So let's switch over to the 15 minutes time frame. So the 15 minutes time frame should be able to give us enough bullish and our bearish bias, right? Bullish and bearish bias. Now for yesterday, we saw some kind of bullish bias on it, right? So you can see this is a bullish bias. Why? Yesterday happens to be a bullish day, right? Yesterday happens to be a bullish day. That means the market actually closed bullish yesterday. So we printed a high for yesterday. Then, of course, we traded above that high to form a new high. We traded above that high to form a new high, right? So yesterday was a bullish day. So that is why I said we are going to have both bullish and bearish bias, okay? So guys, if you look at this particular price level, uh, so yesterday the market was trying to recover from the losses. I mean, the movement downward, and then we got this level of support that was turned resistance here, and it stopped the market from going high, right? So let me adjust it very well. So it simply means that level becomes a level where the market has to break before we can now think of buying, right? So the market have to break that level before we think of buying. Otherwise, any movement lower than this low already established will be selling. So guys, this is the range that we are in now. So inside here, we don't want to trade, right? Inside here, we don't want to trade. Okay, so we just want to wait for a strong bullish movement that is able to break this high before we can buy. So that will be a buy stop, right? A buy stop. So a strong bullish movement, right? That's strong enough to break this high. Why? Yesterday we attempted it. We attempted to break it with all our minds, man. We could not. So it simply means that level becomes a barrier for the market going forward. Okay, so if the market breaking through this level, of course, it means we are now seeing opportunities to buy. Otherwise, if the market drops again and strong enough to take out this liquidity, then it means, hey, the downward trend will just be continuing. Okay, so that's for USDJPY. So, guys, you have some instruments you're looking at, you have analyzed already, and you're not too sure, guys. Come on, guys. You have analyzed some instruments, or you are looking at, or you have some trade running for you. So we can go on and on and analyze more and more currency pair. Oh, guys, have you seen what happened to copper? Come on, guys. Have you seen what happened to copper? There was a big gap, right? There was a very big gap, and that gap was in my favor. Oh my goodness. So look at what happened to copper, guys. So let me go to history and show you. Look at what happened to copper. Can you see what happened to copper? This one was sweet, oh man. This one is sweeter than honey in the honeycomb. I don't know whether you guys are trading copper. But for you to trade copper, you need some kind of good deposit, right? So look at what happened to copper. Now, the copper itself, globally, there will be there is already high demand for copper. You don't want to sleep on this one, I'm telling you. You don't want to sleep on trading copper. Trading copper is sweet, man. So it gap upward. So does it mean that it has stopped going upward? So that's about 694,000 naira. Just waking up. How do you feel waking up to see 694,000 naira, sir? How do you feel? How do you feel? Uh, Now I see where I place the trade, right? I added to the position. So it gave me a drawdown. I enter a buy here. That was 0.01. It gave me a drawdown. I think drawdown of I think minus 70 something thousand naira, right? So but I saw that it's not cheaper, right? It's not cheaper. I entered another 0.01 here. So it was 0.02 that gap up this much to give this 600. How do you feel? Let me get the comment section and hear from you. Okay, you just wake up, you see 694. You just wake up and you saw 694,000 naira. Tell me, how do you feel? Anyway, but if you convert that to dollar, it's just maybe somewhere around 400 or 500, right? Maybe $480, something around somewhere around there. Okay, but not bad.
So guys, it means you can focus on these instruments that are really dangerously trending in a particular direction. So this copper now that I've shown you now, does it mean you should now trade it? Of course, I'm showing you so that you can trade it. I'm showing you so that you can trade it, right? So it means but it's not to enter now because the market will have to retrace, right? After this gap up, there will be a good level of retracement, right? There will be a very good level of retracement. So it's not something you trade today, but I'm just showing you that hey, you can diversify and look at most of these commodities and of course follow the parent direction, like what is happening on gold, silver, and the rest, man. And of course, US the index US 30, US 100, US 500. Guys, get to the comment section. Let me know the instrument you want us to look at, or the instrument you have a trade on. Do you have a trade? Do you have a trade running for you? Do you have a trade running for you? Mm. So I want to use these 5 minutes remaining. Okay, fine. The first person have dropped something for us. That's Mr. Peter Popola. Okay, I like that name, Popola. Okay, you said we should look at USD card. Then of course, Mr. Casey said we should do US 100. Okay, let's do those two very fast. So the USD card. So USD card, that fastest finger, right? And that's the guy that dropped it first. So USD card. This Mr. Peter, this your USD card. Do you have a trade on it? Or you just want us to look at it? Or you have a special affinity for USD card? Let me know, let me know, let me know. Do you have a trade on it? So still type now, type for me. I like it when you engage me, when you talk with me. Do you have a trade on it? So USD card, let's do H4 time frame first. H4 time frame. I'm still waiting for you, Mr. Peter. Do you have a trade on it? Okay, Miss. So guys, this is okay. Wait, I have to protect this profit on gold first because it looks like the thing don't do it with trace. Okay, so let's continue. So so USD card, as you can see clearly here, this instrument is nose diving and facing downward. As you can see, is strongly facing downward. Okay, so what can we see here? Very strong downward movement right here, right? Okay, so guys, this is a very strong downward trend on USD card, right? That means the base currency US dollar is very weak. So guys, this is a strong downward trend. So what do you do? It means if you have a sell, continue selling, right? Continue selling. What if you have a buy? Now, wait a minute. Let's look at 15 minutes time frame. So 15 minutes time frame should give us more perspective, more detail about day-to-day trading. So that is why you don't just conclude your analysis on you don't just conclude your analysis on the H4 time frame. You also drop down to a much lower time frame to look at for uh, where you can enter or exit. Okay. Now, for those, so I asked you a question whether you have a trade, but you have not answered. Right, Mr. Peter. Okay, you are about to trade. Beautiful. So this is a very strong downward movement right here. So when you see a very strong downward movement, you have to follow the direction. That's why they say follow the trend, right? You have to follow the direction. Now, trading against the direction is a high risk trade. So before you want to trade against a direction, you must ask yourself this question: am I willing to take a high risk trade? Right? The kind of capital you have, is it a capital that can do high risk? Let me tell you guys this story. I have a client that said, "Hey, Emmanuel, I have 300,000 naira, and this 300,000 naira, I'm supposed to pay my rent next month, 300,000 naira. But I want to use 150 out of that 300,000 naira to trade and make profit for 1 month before paying my rent." Now, that kind of person cannot be taking high risk trade. That kind of that kind of a trader should only focus on low risk. And what do we mean by low risk? Low risk means any direction you see the market is facing, right? You follow that direction. For let me give you an example because the chart don't lie, right? As at yesterday, look carefully, sir, because there is a lot of things to learn on the left hand side of the chart. So as at yesterday, and I mean as at this day, the market is already heavily going down. Why? Because this is the yesterday of yesterday, right? I hope you understand what I mean. So as I did yesterday, what happened? The market traded downward, took out this low, went up, and still came down. And for today, it formed a new low. So it simply means for you now, you have to follow this direction. Follow this direction. So it simply means you have to wait for a little bit of let the market give you some kind of a premium price, right? So the market from time to time normally prints premium price. So let's check H1 time frame. So we can see some premium, some legit direction that we can take from fair value gaps and all of that. Okay. So the first thing you want to highlight is the opening price of the day, right? That seems to be your first premium that you want to wait for. If you notice, the market has already done that too, right? So if you watch the market traded downward, right, and retraced to meet that opening price, right? Because this is actually the area before before going down, as you can see, right? Before this downward. So the market has already done that. So the question is, will it do it the second time? So that's the first one. The second one is let's look at for more uh, areas that we can use. Okay, so the second one is to use this level of support, this level of support turn resistance, right? This level of support turn resistance. So we can use this level of support turn resistance. So these are the areas you should be looking out for to sell, Mr. Peter, right? So let's just keep it here now so that we can analyze other instruments that other persons have mentioned. So you want to say, Mr. Peter, you want to say. So quickly, the next question, let's go. Who is there? Let me take it accordingly. Then the next person say US 100, right? So Mr. Casey, how are you now? Where are you reaching me from? So it's already 9. Mr. Casey said, I'm good. Where are you reaching me from? So then US 100, US 100. So these instruments are powered instruments. They are powerful instrument that's are very, very strong, right? That means they are instrument for big money. They're instrument for big money. It simply means you must have your account, uh, 1 million naira, 2 million naira before you start looking at these instruments. And then, of course, it will favor you make enough money from them. For example, this US 100 is actually companies. So let's keep it on the daily time frame. Let's look at it. Sir, what can you see, Mr. Casey? We are seeing a very strong, powerful upward trend. Very strong one. And this has been happening for how long? Man, what you're looking at is this is daily time frame. So each column you're looking at is activity for 1 month. So this is where one can do long-term investment, okay? Just go and withdraw that 100 million naira or go and withdraw the 10 million naira you have in the bank, right? You deposit into your trading account. You place a buy. You go and sleep. but of course you need to have stop loss, right? Now you can even do long-term investment here, right? Now these are companies. It means, right? Those companies are doing well. I mean, the companies we have in the US, right? So that's NASDAQ, National Association of Security Dealers Automated Quoting System, which tracks the 100 best companies trading on the floor of the New York Stock Exchange. So, so the likes of Boeing will be there, number one aircraft manufacturers in the world. The likes of Alphabet will be there, that has Google and the rest. So the likes of Apple. So guys, this company keep innovating. So I think you understand what I mean. So guys, withdraw more money and deposit so that your account will be fat enough. So on this daily time frame, the market is hitting a level of resistance, right? But the market like creating this kind of uh, relatively equal highs, right? Because it uses it as a magnet to smash. It uses it as a magnet, Mr. Casey. The market like creating this type of high, so because it uses it as a magnet, right, for liquidity levels to smash it. Come on, guys, because a lot of person will start selling and putting their stop loss above here. So it will smash it, man. So let me give you an example. Is this one not relatively equal highs? This one is a high, this is a high, this is a high, this is a high. This one is even relatively equal highs, 3 places. What happened next? Can you tell me? The market actually came down and did what? And smashed the hell. Smash it. Can you see? Guys, I tell people trading is not that hard, right? So you learn from the chart. Left-hand side is your teacher, right? So you look at the left-hand side of the chart. So guys, it simply means we have reached a very strong level where the market will find it difficult to break. But guess what? It may retrace and later smash it, right? It may retrace and later smash it. Therefore, now I've dropped down to 4 hours time frame. That means I'm expecting some level of retracement. Come on, guys. Can you see how the analysis is going? I'm expecting some level of retracement towards this level, right? Then from there, we may be able to smash it. The smash, I mean, is to trade above it. You understand the smash? Oh my goodness. So guys, for UKC, I'm making level, expecting some level of retracement that particular level. So therefore, you don't buy, right? You wait for a retracement. So guys, let me draw the curtain here, and I'm sure you got some value from it. All right. So let me drop my number. You say you need my number. Of course, I always drop the number. So 090, you call me on WhatsApp, right? Not normal call. You call me on WhatsApp or you drop a message for me on WhatsApp. 09026264507. Now the market will be with you guys, will be with you with a lot of profit, right? Emmanuel. 4507. So guys, thank you very much for today. Join us tomorrow again for another exciting section like this one. No, I think the number you wrote is wrong, Mr. Casey. 2626-4507, not 4500. 4507. All right, guys, thank you very much. Bye for now. Now, wait a minute. Now, you guys can be doing manual trading and also be copying professional traders. I hope you know that our copy trade is live running, man. You can copy professional traders as they make money. You're equally making money. That one is by the side. So please do wait to reach out to your account officer. Call them on the phone. If you cannot get your account officer, reach out to me, right? I've dropped my number, right? Say, Emmanuel, I want to do copy trading. See the amount I have. So while I'm doing this manual trading, I can have an account funded and be copying other professionals. As they make money, they are making 5%, 10% weekly, 25% weekly. Your account is also growing like that. By the side, man, these are ways to make money. Now you know I've given you the updates. Thank you very much, guys. Bye for now.